Hello, Bob, and thank you once again for joining us. So this week, as you predicted, the EU and UK trade talks caused major volatility in the market, specifically with the cable, which experienced a 100-point drop at one stage with the announcements coming out. But what can we expect next week in terms of macroeconomic data and fundamentals?
Really quite a week for the US dollar on the economic data front. Start of the week, job openings, then you got inflation, weekly jobless claims figures, and wrapping things up, consumer sentiment figures. No major influence on the dollar, barring a spike in jobless claims figures. However, focus will be on Capitol Hill and COVID-19. Next week is the FDA review of Pfizer Inc. and Moderna Inc. So obviously those are key decisions and that will have a material impact on market risk sentiment and the dollar. For the Eurozone, you've got German manufacturing figures at the start of the week, then you got ZEW economic sentiment figures, then trade data out of Germany, and wrapping things up is going to be the all-important ECB monetary policy decision on Thursday. Lagarde has assured of more support, so really it's about whether that meets market expectations. For the pound, relatively quiet week, industrial and manufacturing production figures, trade data, and 3-month rolling GDP numbers. Ultimately, however, it's going to be logistics on the vaccine front and making sure that the vaccine gets to the places it needs to get to and inoculation takes place. Now it's all about production, distribution, and the number of doses that are obviously being sent out. For the US dollar, obviously, FDA approvals next week as well, so that will be a key area of focus. We're unlikely to see the FDA decline, but obviously there is a chance. So that would really throw the markets into a loop. We need to look out for that.
So very clear, vaccine approval for the USD, ECG projections for the euro, and Brexit talks for the pound. But what about commodity currencies? What can we expect from the loonie, the Kiwi, and the Aussie dollar?
The Aussie dollar next week, quiet week on the economic data front. Stats are limited to business and consumer confidence figures. We saw contribution to GDP for the third quarter, household spending. So consumer confidence is particularly important to support this economic recovery. And obviously business investment is also key to support that flow of increase in hiring and therefore increase in wage growth and then spending. RBA is expecting spare capacity for a while, however, but confidence is going to need to improve. For the Kiwi dollar, electronic card retail sales and business PMIs, that will influence. Ultimately, however, we're going to be looking at economic data out of China and COVID-19 news to drive the Kiwi dollar. For the loonie, quiet week, Monday, IV PMI numbers. There'll be some interest in that. Ultimately, however, it's the Bank of Canada monetary policy decision on Wednesday. They're unlikely to make a move now that there is progress towards COVID-19 and oil prices are on the move in response. There are hopes of an economic rebound going into the first quarter of next year.
So in general, commodity traders should really be looking out for coronavirus updates. But what about Asian markets? What can we expect in the week ahead, specifically from China and Japan?
For the Japanese yen, quiet week on the economic data front. Really, the only key stat we're going to be interested in is household spending figures. Finalized GDP numbers shouldn't draw too much attention. And then there's some manufacturing condition numbers for the fourth quarter. We're going to be forgiving on that. I would assume the market's going to brush that aside now that we're making progress on COVID-19's vaccine. For the Chinese yuan, trade data and inflation figures, obviously expect plenty of interest in the trade figures, particularly after Joe Biden's announcement that he will retain that phase 1 agreement for a little while longer, if not prolonged period of time, as he begins to settle down to work out what his plans are in terms of trade and foreign policy with China.
So it seems that coronavirus is still overshadowing all macroeconomic data releases. But let's focus more on geopolitical risks for the week ahead. With the US elections seemingly over and Biden winning the elections, coronavirus still in the background, and of course Brexit very close on the horizon with deal or no deal. What can you comment on that?
Of late, there's been 3 key areas of focus really in terms of fundamentals and non-economic calendar events. These are Brexit, COVID-19, and US fiscal stimulus to support the economic recovery. We've seen Britain turn around the approval for COVID-19. Next week we've got the FDA in action. They're reviewing Pfizer Inc., BioNTech, and Moderna Inc.'s vaccines. Approvals there will support demand for riskier assets. If we get progress towards a stimulus package as well, then that would be quite a boon for riskier assets, and that would drive demand for the likes of the Dow and beyond, really emerging markets as well, because that would sink the greenback. On the Brexit front, there's likely to be plenty of news between now and through the weekend in terms of where things stand. There's still a chance of a no deal, so that's obviously causing plenty of stress. But on the flip side, obviously COVID-19 vaccine approval by the UK, that's a positive. And now the market's going to be focused on logistics and how the UK government is delivering that and ensuring, that the vaccinations take place. Next up will obviously be the numbers, however. How many doses are they going to get? Is it really enough to bring an end to the pandemic and containment measures that have crippled, economies around the world?
Well, that's all for today, Bob. As always, thank you so much for your time and input, and I'll see you again next time. That was The Week Ahead with Bob Mason of FX Empire. In the meantime, keep up to date with all the latest developments by following us on all our social media outlets.